Hello, and welcome to Virtual Investor Conferences. My name is John Viglotti, and on behalf of OTC Markets, we're very pleased you joined us for our next live presentation from Oakworth Capital. And before I introduce our speakers, please note to submit your questions in the question box to the left of the slides. And all of today's presentations will be recorded and available for 24/7 replay. At this point, I'm very pleased to welcome Scott Reed. He's the Senior Managing Director, Chairman, and Chief Executive Officer. Jennifer Kimbrough is the Chief Financial Officer. Sam Scalisi is the Chief Operating Officer. And Forrest Watley is the Chief Performance Officer of Oakworth Capital, which trades on the OTCQX Best Market under the symbol OAKC. Welcome, Oakworth team.
John, thank you for that introduction, and we really appreciate everybody's time this morning and the opportunity to talk about what we're up to at Oakworth. So with that, I will move into a brief overview of the company. Oakworth opened in March of 2008, initially capitalized by a $37 million de novo raise. We are headquartered in Birmingham, Alabama. Since that time, we have grown to currently 3 markets, those being in Birmingham, Mobile, and Nashville, and soon to be a 4th market in Charlotte, North Carolina. I'd be remiss if I didn't point out that we're really proud of the fact that for the 5th year in a row, we have been rated the #1 bank to work for in the entire United States by the American Banker. Shifting to the financial highlights, the first 2 lines are really important. We are a very balanced organization. If you look at our bank balance sheet, we're a little north of $1.3 billion in total assets, and we manage on the wealth side a little north of $1.8 billion. Importantly, our wealth business is truly wealth business. If you look at our mix, we have 70% of individually managed account with the balance of or 30% of true fiduciary trust business. Moving to the third line, the profitability metrics are pretty self-explanatory. I will point out, though, that for the past 4 or 5 years, we have made conscious strategic investments that we knew would impact earnings, but have really well positioned ourselves for exciting growth in the future. I believe our asset quality metrics do speak for themselves. We believe we have, and we're confident we have, a pristine loan portfolio, which positions us very well in the future. And we are a very well capitalized organization and positioned well for future growth. I would be remiss if I didn't point out that we are a very purpose and values driven organization. The purpose for our company is really to support the success of our clients and really all of our stakeholders. And our values is the lens by which we make all of our decisions, whether they're strategic decisions, people joining the organization, or in fact, onboarding client relationships. That's very, very important in everything that we do. This next slide is, I know, a chart that a lot of our listeners have seen before, but it's really critical to understand how we view the business. What you see on the left-hand side is a very predictable path of growing a family. On the right side, you see the very predictable path of a growing business. We believe strongly that these are very intertwined with our target market, which I'll touch on in just a minute. But it's really important to note that our core disciplines are very much informed by these cycles that, again, we believe are very predictable and positions us to ask great questions and to add value to client relationships as we grow with them. So I mentioned our 3 core disciplines. We are in the banking business, of course. We offer many of the traditional commercial and private banking services, and also deliver advisory services. So think on the individual or the family side, financial planning, but certainly also on the commercial side, we provide discussions around succession planning, valuation, and the like. And then finally, wealth management. I mentioned that earlier. We have a very dynamic wealth offer. You can see a breakdown of our assets. I mentioned that 70% is IMA and other. You'll see a breakdown of the asset classes. You'll notice an alternative class there. That's primarily real estate and forest. So we do a lot of alternative assets. I think the way we approach our clients is very unique in our industry, and Sam will talk a little bit about how we do that consistently in the slides coming up. But you see the core disciplines around the outside. Every relationship that we have has a primary client advisor that really coordinates all of those disciplines for the benefit of the client. And then lastly, I want to touch on our target market. We are focused on closely held businesses, professionals, and families that have already run that track that tend to have a bit more complex financial needs. That has contributed to a lot of very consistent and dynamic growth. And I'm going to turn it over to Forrest Watley to talk about our growth over the past few years. So Forrest, I'll turn it over to you.
Great. Thank you, Scott. Good morning, everyone. This first slide you can see is a look at our total assets and net income at our growth from 2015 through fiscal year 2022. We have enjoyed and realized consistent growth year over year. As you can see from a banking asset standpoint, CAGR of 18.8%. You can see from a wealth assets standpoint, a CAGR of 12.4%. Of note, which everyone realizes, 2022 was a very challenging year from a wealth asset growth standpoint, so it had a negative impact on the CAGR last year. When you turn to net income, again, very consistent growth year over year, realizing a CAGR of 17.3%. I will make note of a couple of years, and it's in line with what Scott referenced. In 2016 and in 2020, we made strategic investments into new markets. 2016 was our South Alabama location based out of Mobile. And then in 2020, we invested in Middle Tennessee, based out of Nashville. Those were years of investment, and you can see the following years we realized really an outsized return on that investment that's reflective in the net income numbers. The next slide is another look at our history of consistent growth from an earnings per share standpoint and annual tangible book value per share. You can see a CAGR of 14.8% from an EPS standpoint, and then you can see a CAGR of 7.6% from an annual tangible book value per share. Of course, again, as everybody realizes, in 2022, we had some impact of the AOCI mark, which was about $11 million, represented 10% of our securities portfolio, so that impacted 2022. As Scott referenced, our credit quality. This slide shows the history since formation of the company in 2008. We've enjoyed sound credit quality year over year with minimal charge-offs. I think the important point here is this is intentional. We've been very intentional since the formation of the company to balance growth with sound credit metrics, and that's reflected in our results, which detailed in this slide. A deeper look into our loan portfolio. You can see the diversity within this portfolio. This is a mix that we've enjoyed year over year, and it is our desirable diversification. You can see from a commercial standpoint, it's roughly 40% of our portfolio. Those are true middle market C&I privately held entities that make up that segment of our loan portfolio. Commercial real estate is roughly 35%. Of note that in that 35% bucket, a third of that would be owner-occupied real estate. Consumer, really private banking loans make up 17% of our portfolio, And then the balance of the portfolio would be real estate construction loans. These would be commercial construction loans to our clients, and then some residential construction loans. And within that residential construction loan bucket, those are primary residence or our secondary residence for our client base. Again, it's a conscious effort since the formation of the company to maintain this diversification. Finally, this slide shows some demographics of the markets that we're doing business in. It references South Alabama, Central Alabama, Middle Tennessee, and as Scott alluded to, the Central Carolinas based out of Charlotte, which we're in the process of opening this year. Important points here are that the growth of Oakworth outpaces the growth in these markets. We also are doing business in 18 states throughout the country. The important point there is that the clients in those 18 states have a direct tie back to one of these markets. So we have enjoyed great growth in these markets. We continue to strategically plan for strategic investments in new markets throughout the Southeast, and the Central Carolinas is a reflection and an example of that strategic plan. I'd now like to turn it over to Sam Scalisi, who will talk about our operating platform and how we deliver the client experience to our clients. Sam?
Yeah, Boris, thank you. Excited to share with the group today the Oakworth Way. The Oakworth Way is our operating system that we adopted roughly 3.5 years ago, with the thought that we were entering into the phase with which we scale and grow the company, and it being really important that we memorialize and document and institutionalize the processes that had delivered such value to our stakeholders over the time leading up to the last few years. You know, what is the operating system? It's a framework that allows us to share our vision consistently throughout the company, as well as share priorities and prioritize issues as they arise throughout the organization. It provides clarity and accountability for all of our associates and key responsibilities, not just at the leadership team level, but throughout the organization, and allows everyone to see how they contribute to the company's success. And it also provides a regular cadence of meetings and structure that allows us to identify issues and resolve them quickly. We've certainly seen the benefit of this, not just in the communication that it's provided to all of our associates, but also getting those associates in the right seat. Right associates, those that all of which share our core values, but putting them in a position to be successful and contribute in an impactful way to our company. And then finally, establishing a set of key performance indicators throughout the company that helps us to have an objective measure on how our company is performing, both to celebrate the successes as well as identify areas that need to improve across the organization. One part of the Oakworth Way is our approach, and our approach is a series or a set of 9 core processes that were developed since our beginnings and align very specifically with the things that our clients have told us is unique about Oakworth. And that is the people that they do business with, the quality of those people, the level of service that they receive, and the fact that we make their financial lives easier. Those true uniques to our clients are supported by the processes you see on the screen. They're measured, they're trained, and they're very intentional. And that's why we have the confidence that we'll continue to be able to deliver the experience our clients have enjoyed, not just now, but as we scale. And the fact that all of our shareholders and all of our stakeholders will benefit. And I'll spend just a couple of minutes touching on each of those, and then maybe dig in a little bit when Jennifer takes over on the financial side. Our first stakeholder obviously is our clients, and we believe that client retention rate is a really objective measure that we're doing the right things and creating value in those relationships. We've exceeded 95% in our client retention rate and expect that to continue. Another objective measure is our Net Promoter Score, and you'll see we adopted the Net Promoter Score roughly 5 years ago and have maintained a score in excess of 90 since that time. We're at 96 right now, and you can see it compares very favorably to a lot of brands that are known, not just in financial services, but across all industries in the client experience and the level of service that they deliver to their clients. Another group is our communities, all the communities that we serve, and not only do we measure that through the number of groups that we participate with, We look at the time that our associates are committing to each of these organizations, as well as contributing financially. We contribute in excess of 1% of our net income annually to organizations in all the communities that we serve. Our associates are a key stakeholder, and Scott's already touched on the fact that being the #1 best bank to work for in the country by American Banker for the last 5 consecutive years is something we're extremely proud of. And not unlike our clients, the retention rate with which associates continue their careers with Oakworth is another objective measure, and we exceed 95% in that measure as well. Finally, and Forrest touched on this, our growth in EPS is the measure that we use to have confidence that our shareholders, our last stakeholder, are succeeding and winning through their investment in Oakworth. And you can see we have a track record of consistent EPS growth. I'm going to ask Jennifer Kimbrough to take over and provide a more detailed overview of our financial performance. Jennifer.
Thank you, Sam. And thanks to all of you in the audience for your interest in Oakworth. I'm going to start by addressing how we're positioned for today's environment, and I'll hit on a couple of key points here and then go into a little bit more detail on the following slides. First of all, let's start with liquidity. And our liquidity ratio is strong at greater than 15% at this point. Our loan to deposit ratio is 94.5%, clearly less than 100 compared to where the industry has gone in the last few months. And I'll talk about wholesale funding a little bit more on the next slide, but the message there is that our wholesale funding capabilities are basically all available to us. We do manage the bank conservatively from a capital standpoint. It is our goal and our history in our current state to exceed the well-capitalized levels that have been set forth, with excess capital actually available at the holdco. As some of you may know, we executed a successful subordinated debt raise in August of 2022 and have well over half of the proceeds of that subordinated debt still at the holdco and ready to push to the bank to support the growth that you're hearing about today. We'll talk a little bit about our securities portfolio, but I do think it's important for you to know that our securities portfolio strategy has been to support the balance sheet, not to support liquidity. So in other words, clearly the securities portfolio is available to us for liquidity should we need it. That is not how we manage the portfolio or what we depend on it for, with a securities portfolio of about 10% of our asset balance, which is pretty far south of what you see typically in the industry. And then Forrest did already comment on our pristine credit quality, but I think that's a pretty important point to reiterate as we think about the conversations that are being had in the market today. So let's look at liquidity just a little bit closer. Here I've got listed for you the sources of our wholesale funding. What is not listed is the new Fed facility or the discount window, which are fully available to us based on, as you can see in the bottom right-hand corner, our securities portfolio and the pieces of it that would support that wholesale funding should we need it. Our loans to deposits, historically, you'll see that in 2021 and even 2022, our loan to deposit ratio is relatively low. And that has to do with what was going on in the industry at the time. Like others, we were flush with deposits. And so this ratio is that you're seeing here is a little bit lower than we've run historically. We typically run in the 90% range, which is pretty consistent with what I told you earlier, that we're at approximately 96% on that today. On the next slide, a closer look at our capital. And again, I'll say that we do manage capital to be well in excess of well-capitalized levels. The ratio on this page that's getting quite a bit of press is the Common Equity Tier 1 ratio. And you'll see our reported in 2022 is of 12/31 of 2022 is 10.8%. The adjusted ratio is what I'm referring to when I say that that's been a common conversation piece of late. And our adjusted for the unrealized gain loss in the securities portfolio common equity tier 1 ratio is 9.8%, which is still well in excess of well capitalized and something that we are very comfortable with. Primary message on the balance sheet and on our wealth assets is double-digit CAGRs over the last 5 years, as you can see on this page. In most cases, in excess of 20% CAGR for our balance sheet. The wealth assets is significantly impacted by recent asset valuations on that side. I will say, just as a point of note, that while the overall level of asset valuation for our wealth group has been impacted by the market, there's still quite a bit of new assets that have been added, and approximately 200 million of new wealth assets came in the year 2022, if that helps to size up for you the health of that business. I also want to spend just a minute on the net interest margin, which is probably pretty important to a lot of you that are listening. And the point that I'd like to make here is just the fact that we ended the fourth quarter of 2022 with a 368 net interest margin. And you can see the components here. Happy with our yield on loans. Our deposit cost of funding is increasing. It's been manageable, and we expect it to continue to be manageable. And the full year NIM for last year was 338 versus that 368 in the fourth quarter. And I think that's an important part of the story for you to understand where we're going in 2023 and beyond. And I would tell you that we are so far in first quarter, which is obviously approaching completion quickly. The first quarter NIM looks fairly stable with fourth quarter of 2022, which is what we would have expected. I will talk for just a minute about profitability and end here. One point is, in several of these slides around profitability, you've seen us refer to core versus reported. And there is a reconciliation in the appendix of these slides if you'd like to look at the different components of that. The primary one, as you might expect, is PPP fees in 2020 and 2021. So that's what you're looking at here. This is also reflective of that investment that I believe both Forrest and Scott mentioned, and that is our history. And I think you should understand that about our approach, and that is that we will invest in growth as we've done in the past in South Alabama, Middle Tennessee, and as we're getting ready to do in Central Carolinas. And we are accustomed to seeing the return on the backside of that investment return us to our prior profitability tracks. I hope that's obvious in the information that we've given you here today. And so with that, I'll turn it back over to Scott.
Yeah, thank you, Jennifer. The one point I want to make about the broader team is that we have a very deep group of experienced professionals. This is a little bit of an extended group than what's on the call today. I will tell you that even a level down, we've been very intentional about building depth to execute on our plan moving forward. So we're excited about sharing with a broader group what we're up to. Our move to the OTCQX is a component of that plan. These OTCQX has been great. It's providing a platform for us to tell our story. It's also a much better experience for our shareholders. But I kind of want to conclude with sort of giving some insight into what we're up to here. We believe and are confident that we are building what will in the future become an iconic brand in financial services. That is a very bold statement. But I will tell you that we have spent the better part of the first 15 years really refining our approach. We are super encouraged by our entry into Middle Tennessee. That has given us great confidence that the approach is widely accepted We're getting great conversations in our Charlotte market that we're about to enter. And we believe over the next 5 to 10 years, we will make great progress towards that really bold goal of becoming an iconic brand. So we appreciate everybody's time today. I think now we've got a few minutes left to open it up for questions. By the way, I do want to mention, I don't think we are signed up for any one-on-ones, but we are more than happy to have an offline conversation with anybody that would like to do that. So with that, Jennifer, I'll turn it over to you to see if we have any questions from the group.
We do, Scott. We've got a couple of questions out there, and this first question I think probably starts with you, and that is, what are your growth drivers over the next few years?
Well, I think I just touched on them. Certainly our investment in very, very dynamic markets is a key component of that. I think the sort of behind the curtain piece of this, though, is we've worked very hard to create a platform that is super attractive for the best talent in the markets that we move into. And so part and parcel to these markets is going out and sourcing the people that share our vision about where the company's going, and certainly share the values that we talk about all day, every day in the organization. We believe that will allow us to continue this growth that we've created over the past several years.
All right, next question. As rates ticked up, banks welcome the relief on margin pressures. Do you see any downsides for the bank if rates remain this high? If so, what is the bank doing to mitigate? Good question, and I think I'll start with that and invite you guys to jump into it if you would like to add to my comments. First of all, we are an asset-sensitive bank. We remain an asset-sensitive bank, although we have pulled that back in recent years to a more neutral position. But as far as rates remaining high, we are a pretty disciplined group of people in terms of how we manage pricing on both sides of the balance sheet, and we will stick to our plan, so to speak. And part of that plan is that our business model is built around relationships. And that is all aspects of a relationship that you've heard from commercial banking, private banking, advisory services, and wealth assets. And that tends to help us manage through both sides of the balance sheet in an environment that's uncertain. So certainly from a rates increasing or rates staying where they are, we feel like we're well positioned for that. Our securities portfolio, by the way, is short. I should have mentioned that earlier, at 4.6 duration. And all of our securities portfolio is available for sale. So you can see that mark in our financial statements. And we do, though, even having said that, we do intend to hold those securities to maturity. And as you, I hope, saw from our liquidity slides, we should not need to dip into that securities portfolio for liquidity purposes. So we don't intend to realize that mark. Any other comments from you guys? If not, I will keep on going. Let's see. Time for a quick answer on this one. Any impact on deposits or otherwise from the recent banking crisis? Forrest, do you want to take the first shot at that?
Sure. We've experienced no negative effects or impacts. I would say conversely, it's been positive. We've had opportunities to deepen relationships with existing clients. It provided us opportunities to get some traction around prospects. We've been having conversations, and we've established new relationships. So last week was a great week for us from a relationship standpoint. We've seen positive movement in deposits and just reaffirmed with our existing clients in all our markets the safety and soundness of Oakworth, the confidence they have in us. So I would say, in summary, it's been a positive occurrence for us this past week, and think it will continue.
All right, guys, I think that's all the time we have for questions. Thank you again to everyone for your questions and your attention. Scott, I'll let you close.
Well, it's really more of the same of what I mentioned earlier. We really appreciate everybody's time this morning. We think we're up to something pretty unique and special at Oakworth, and feel like we are very well positioned for dynamic growth moving into the future. So we really appreciate everybody's time this morning.